Welcome to Digital Asset News. Take top stories in cryptocurrency and digital assets and break them down to bite-sized pieces. Today, got some interesting stuff. First up, we got Chainlink. Cryptocurrency is up 100% year to date. And we're going to talk about what's behind the intense rally, and we're going to talk about exactly why I think this is actually going up and will continue to go up as time progresses. Also, the question is asked, is Bitcoin digital gold? The Federal Reserve tears narrative down with a new report. And I gotta tell you, this is a fascinating article because can you imagine 5 years ago the Federal Reserve even mentioning Bitcoin? But here we are, and they wrote a whole report about it. Also, a quick article that states the obvious. If you bought $1,000 of XRP 6 years ago, it would be worth $67,000 now. And we're gonna take a look at where XRP is going and how much you would have made if you would have bought Bitcoin at the same time. So let's jump into today's stories. But first, let's take a look at CoinMarketCap and see what's going on. So let's do a little refresh because I don't know when this was done. So Bitcoin just above 7,000, which is pretty amazing. That was a big point of resistance. So over the weekend, it actually held. So that's good news, even though it's down 2.5%. Ethereum down to 177. XRP sitting there at almost 19 cents. Tether and blah blah blah, Litecoin. Binance Coin, EOS, and Tezos at 220, but Chainlink, look at that. Nice little pump, 362. Let's get into it. So Chainlink, this was a pretty good article and it caught my attention because, as you may or may not know, Chainlink is one of my 7. So here's what I'm invested in. Bitcoin, Ethereum, XRP, EOS, Cardano, Chainlink, and now recently Tezos. So when I talk about these different types of cryptocurrencies and digital assets, it's because I'm biased. And that's the truth. So let's break into this Chainlink story. So Chainlink's native currency Link has rebounded by more than 180% from its mid-March lows, beating top assets including Bitcoin and Ethereum. The Link to dollar exchange rate topped at $3.84. Pretty good. On Saturday, as Parify Capital, one of the venture firms backing popular DeFi platform MakerDAO, proposed to collateralize its stablecoin DAI using the Link cryptocurrency. And I got to tell you, I saw this and I'm like, not really sure if I'm really pumped up about that. So what they're saying is that MakerDAO, you're going to be able to collateralize everything as far as like Chainlink goes against DAI or with DAI. And me personally, that's not like Chainlink is for. Chainlink is an oracle and it is set to pull data via API out from the real world into smart contracts. So just do that. Just do what you're supposed to do and everything will work itself out. Now, if they want to pull it in, they can pull it in. I mean, that's not what I'm saying. I'm just saying that Chainlink has a very specific purpose and it does that purpose very well. I mean, that's why I'm a big believer and that's why I invested into it. So moving forward, the number of Link wallets last week surged at an average of, this is amazing, 1,400 per day. Not per week, not per month, 1,400 wallets per day were created for Chainlink, leading analysts to predict an uptrend in the Link prices. And that makes a lot of sense. This is a tweet from Kevin Svensson. Don't know who he is. I'm sure he's big. I have no idea who he is. But what was interesting, he says the Link Marines, hashtag Link Marines. So you have the XRP army, and we know how vocal they can be. And now here we have the Link Marines. I haven't really delved into that on the Twitterverse, but I should just to see how they are. I don't know if they're as boisterous as XRP Army, but that'd be interesting to find out. Anyhow, Link up 100% year to date. The Link to dollar exchange rate on Monday jumped 6.26% to 379, signaling traders' willingness to keep the prices afloat above crucial support levels. So they were talking about how everything above around 370, 379, it was a good support level. And means there's only an upside as long as it stays above that. Chainlink's gains also led the prices above its long-term moving average of the 200-day MA. And that increases the possibility of the cryptocurrency to retest 410. An extended move above the said level could push Link's upside targets to 481, and that would be fantastic. So right now, if you haven't realized, let's take a look at the whole market for Chainlink and the price action. So let's click on here, 362, so it's dropped below that 370 support level, so we'll see where it goes. But just so you're aware, this is the only, or one of the few different price action charts where you're going to see let's take a look at when the big bull run of 2017 happened? Around here. So the price was 49 cents. Woo! Wow. And then it pumped to, on January, 10th? To a whopping $1.16. And then it dropped with everything. And it went down to 40 cents. So not too bad, actually. I mean, it was at 44 cents. Went down to 42 cents. Hey, pretty good deal. Wish I would have invested a lot sooner. Anyhow, it just kind of went sideways. But here's the amazing thing. Look at where we were at not too long ago. We were at 433 on June 29th. And then we were at 428 on March 2nd. Then we saw the big crash, which everything dropped down, dropped the buckets. And now here we are back again to around 370, 368, 362. So I got to tell you, Chainlink, in my opinion, is going to do very well over the long term. And if you don't have a clear understanding of what smart contracts are and what Chainlink is, I'll put the Chainlink video at the very end. So if you want to watch another video about what smart contracts are, how they work, how it all interconnects, and Chainlink, what an oracle is and how that works, I'll put it at the very end and go from there. So my final thoughts are this. If I had more money, I would be dumping it into the Chainlink. Moving on. Next up is Bitcoin digital gold. The Federal Reserve tears narrative with new report. I got to tell you, when I saw this, I had to think to myself, the Federal Reserve didn't say squat about Bitcoin years ago. And now all of a sudden, it's like they're on almost level footing and they're bashing it. And that's good. We want to see that type of thing. Once they start to fight you, then you're they're actually in the ring with them and they realize who you are and you're a competitor. So I see Bitcoin as a competitor in the global financial stage. Anyhow, the idea goes that because the asset has similar fundamental characteristics to the precious metal, both are decentralized money, scarce and hard to create, not controlled by a central authority, globally accepted and fungible, Bitcoin will become gold-like asset with time. However, I see a problem. I'll get to that in a second. And it talks about Bitcoin isn't a safe haven yet, Federal Reserve branch states. In a note published last week on April 15th, the Federal Reserve Bank of Kansas City claimed that Bitcoin is decisively not a safe haven, knowing that the asset has acted more like a risk asset than digital gold. Well, what do you expect it to say, of course? But in that note or that paper or that little post that they were actually right. They had some good data, solid data, and it did look correct. And we're going to take a look at that in just a bit. Let's finish up with this article here. So in April's edition of Bloomberg Intelligence's Crypto Outlook, a key theme was that Bitcoin is slowly maturing towards trading like gold does, a sign that it's becoming a digital gold. I disagree. The commodities desk specifically pointed to the adoption of the CME's Bitcoin future. 1, the decreasing volatility on a macro scale, debatable. 2, the growing correlation between gold and the cryptocurrency. 3, and the growing number of users to back his assertion that Bitcoin is slowly becoming digital gold. 4. So those are 4 good points. I could debate those. That's for another video. But sure, we can see how it is maturing into that stage. However, there's one more point, not to mention with the block reward halving, which will arrive what estimates suggest is under 30 days, meaning we're going to see it around May 12th, 2020. That's when around the Bitcoin halving happens, and that's when it usually kicks off a big bull run. Happened the last 2 times, and it happens every 4 years. We'll see what happens. I tend to think that we're going to hit around 100,000 for Bitcoin, and I've made a couple videos about it. Anyhow, moving on, Bitcoin's inflation rate will begin to almost mirror that of gold, which may accelerate this ongoing process. But Bitcoin anyway, analysts say, or buy Bitcoin anyway, analysts say. This is Arthur Hayes, everybody's favorite CEO they love to hate. Arthur Hayes remarked in a blog post that he thinks that investors should buy Bitcoin and gold for the ongoing monetary regime shift, whereas money is becoming increasingly easy to get due to ease central bank policies or quantitative easing or quack economics, as some people call it. And I got to tell you, I agree with Arthur Hayes. He's right on. I think Bitcoin plus gold is a winner. I don't see another way out of it, another way to say it. I mean, Peter Schiff's a big gold bug and he bashes Bitcoin, but you got to understand, he's just a marketer. That's what Peter Schiff is. He's a great marketer. Just like Justin Sun. People hate Justin Sun. He's a great marketer. And I can tip my hat to both those guys. So great job to that. But you have to understand that gold's been around for a very long time, thousands of years. But I see gold as the older generation. They will turn to that as a store of value. However, the new generation is going to turn to gold as a store of value as time goes on, and I'm going to tell you exactly why. First off, let's take a look at this Fed article. Oops, very top. And this is from Federal Reserve Bank of KC, Safe Haven Performance in the Age of Bitcoin. So like I said, it's amazing to me that the Fed even takes the time, their sweet time, to even talk about Bitcoin. But I think they see the writing on the wall. Anyhow, they state we compare the behavior of government bonds, gold, and Bitcoin from January 95 through February 2020, and find that the 10-year Treasury note behaved like a safe haven consistently, gold occasionally, and Bitcoin never. And I gotta tell you, they're right. During March 2020, however, none of the assets can be classified with confidence as a safe haven. So T-bills and T-notes, Treasury notes, backed by the U.S. government, yes, those has been statistically used as a safe haven over time. However, this last little crash we had, we didn't see any of them as a safe haven. So what does that tell you? It tells me that there is, just like Arthur Hayes says, a regime shift, and there is going to be a massive transfer of value coming up. It's only inevitable. Anyhow, it goes on to state that an asset is considered a safe haven if it is uncorrelated or negatively correlated with riskier assets during the time of stress, whatever that may be. So usually we're talking about is the Dow Jones, the S&P 500. As that falls, then the uncorrelated asset should rise because it is negatively correlated with that riskier asset at the time. So then they talk about, we examine these correlations from January 95 through February 2020, and they also took a look at just March 2020 when the bull market ended, and it sure did. So this is the stress index, which is that greenish bar right here, and this is the S&P 500. And you could just see that the stress index, it would be negatively correlated. That's not the big thing. The big thing is this. Bitcoin has a weak positive correlation with the S&P 500 during periods of financial stress, suggesting Bitcoin behaves more like a risk asset than a safe haven. And it's true. I mean, we saw in March, and we saw as some of the times the stock market did dip, not all the time, but sometimes, that Bitcoin would pretty much follow in the footsteps of the market. And you have to understand, there was an article written by it was a DeFi CEO, and he said that, look, if you are a institutional investor, hedge fund manager, and you've got some money into Bitcoin, and you need some some liquidity just to pull out, Bitcoin's always there. The market's never closed, so you can just pull it out real quick, and you can also pull it out of the market when it opens and get your money out. So he says, yeah, he goes, if you're one of those people, you took your money out because you didn't know what was going to happen. It was an unprecedented event. And even gold went down. Now, gold went up, Bitcoin went up, S&P 500 went up. I think the big challenge is going to be as time progresses and we start to see this huge shift, especially with the quantitative easing and the rapid money printing exercise by the Fed that's going on right now and will continue. This is Bitcoin's time to shine. And I feel that if it doesn't make a move, then it is not what it says it is, which is, I believe, a store of value. Now, I think it's going to do that as people start to wake up and realize what the heck is going on. But let me know what you think in the comments section. I'm just one person spouting off my opinions, but I will tell you this, the comments that you guys leave, it helps me to think and to focus my opinions moving forward. So I want to say thanks for that. And I don't even care if they're negative. I really don't. They're negative. Sometimes it helps me to push the channel in a different direction. So thanks anyhow. So we talk about the 10-year Treasury. This is the correlation to no stress. This is the correlation during stress. And of course, it's negatively correlated. Gold negatively correlated. Bitcoin mildly positive correlation. So not so great. Table 1 is looking at everything. Then table 2 breaks it down from 10 years ago, or from January 95 all the way to February 2020. And we take a look at that. And then moving forward, now it takes a look at just March 2020. So you can see that Bitcoin it was 0.02, so really not negative or positive. But then as we move down into March, we can see that yes, there was a positive correlation as far as a safe haven. So table 3 shows that during March 2020, none of the assets exhibited statistically significant safe haven behavior. None, period. 10-year Treasury, gold, or Bitcoin. The result for the 10-year Treasury is somewhat surprising, as it was a safe haven for every stress period from 95 through February 2020, regardless of the duration. And that's the point I'm trying to make. If it wasn't such a huge event, I feel that Bitcoin would have came out as more of a safe haven. But it just crashed like everything else did because everybody was scared, and that's what happens. Although its correlation with the S&P 500 in March 2020 is still negative, it is not statistically significant. Gold has a positive but insignificant correlation, which is unsurprising, and as in the full sample, Bitcoin has a positive, statistically significant correlation, says risk asset in March. Great. So it's a risk asset right, more than a safe haven. So here's my thoughts here. They were right. They're right in this one. If you take a look at just the numbers purely, then yes, it did not act like a safe haven. But neither did gold and neither did T-bills. So what are you going to do? Looking forward, because that's why we're all here. You listening to this video, that's why you're here, because you can see you are somewhat of a futurist and you can understand which way the hockey puck is going. So let's take a look at what I like to look at is VanEck. VanEck, they are huge into gold, and they just put out in January 2020 a little article or a PDF to all of their people and all their investors, the investment case for Bitcoin. Now they have 49 billion assets under management, so not too bad, little place, and they just laid it out pretty simply. And I'm not going to go over the whole thing. Just on page 7 was the most interesting part. Well, they just pretty much put it out like, look, here's why Bitcoin is superior to the dollar and to gold. And remember, this is going out to all their employees, to the people that invest with them, stating this is where you really need to go to. So fungible, is it interchangeable? Gold, high, government issued high, right. So you can interchange it as much as you want. Non-consumable, meaning it doesn't go away. It's not like wheat or it's not like water. Non-consumable, high. Portable, can you move it around? Well, gold, yeah, you can, but it's a real pain in the A. And dollars, sure, you can zip them around, I suppose. High, and crypto is high. I would say that portability, if you're talking about the actual dollar, the physical dollar, it's not really portable. I mean, the fastest way to get the US dollar from New York to someplace in Europe would be to jump on a plane because it doesn't take, especially it's the weekend. You're not moving that stuff. That's just me. And then durable, high, moderate, and high. Highly divisible, moderately, because like you can't, to devise or to make gold divisible, you have to melt it down. The dollar, I mean, you can do it, but you have to do exchanges. And then crypto, you just push a button and you can go to tens of thousands of Satoshis. Is it secure? Can't be counterfeited? Well, you know, crypto with Bitcoin, you have to go through all the different nodes, which is 50,000 plus, and they have to verify every transaction. That's the greatest thing about blockchain. So secure, very secure. Easily transactable, scarce. Gold, they keep finding gold every day. So I don't see how scarce it really is. And we know that as far as like the scarcity of the dollar, it's low because they're printing like crazy. And Bitcoin and other assets, they're extremely high because Bitcoin's only had 21 million. Ethereum's got 108 million, I think, somewhere around there. And then going forward, you know, different assets, they have different properties. Government issues, decentralized and smart. So they pretty much just say, look at this column, high, all the way down, and then gold all the way this way. So if you just look at it side by side, it's a no-brainer. My thoughts are this. It's not going to be a store of value right now. And the one big problem is volatility. And they even say that, let me see, in the last page, the risks. Hacking of trading platforms, that's a problem unless you get a ledger. Or the price volatility. If to consider it as a store of value, it has to keep its value over time. And we just saw that it didn't do that. So once all this volatility goes out the window and we have Bitcoin is going to be, you know, let's say it's 100,000 a piece, right? And it's pretty stable for years. then it becomes a store of value. But you can't have it at 12,000, then drop to 3,000. That's not a store of value. And you can't really do anything as far as like with cryptocurrency. Even stable coins, you can't do it because they're pegged to the US dollar. So, I will say this though, during that crash in March, a lot of people went to the US dollar. So what are you going to do? Me personally, I wish it would become more stable. Right now it's not. I see it will become. But if I was going to store anything, land. I buy land, I buy properties, and especially land. Pretty much retains its value. But that's a whole other video for a different time. So we'll see how it all works out. I see big things for Bitcoin coming up, just not for the store of value right now. However, as far as gold, still far superior. Moving on. And last up, if you bought 1,000 XRP, this would be worth $67,000 now. This is going to be a quick article because it's just a price action. So this is a chart seen below illustrated the point since the crypto market found its last macro bottom in 2014, just under 6 years ago. XRP has appreciated 67,000%, while Bitcoin has only appreciated by 40,000%. Only 40,000. That means if you bought 1,000 worth of XRP at the very bottom in 2014, that same sum would now be worth $67,000. Notably, it isn't all sunshine and rainbows, because if you would have taken out at the very top during the Bitcoin bull run in 2017, if your $1,000 6 years ago would have been worth almost $1 million, $941,000. So, I mean, you did lose a lot if you didn't take out, and that's why I'm always preaching, watch my video on the bull run basics. So if I would have had that video, if I would have known what I would have known then in 2017, I mean, first of all, we all would have cashed out. Let's just be honest. No one's going to be hodling Bitcoin at 20,000. If we would have known it was going to crash to 3. So if we can always learn from the past. I mean, the history just repeats itself. So this next bull run that's coming up, definitely watch the bull run basics. It's very quick, shows you exit strategies, and it's very simple. It's as simple as I can make it because I'm a simple person. Anyhow, this article goes on to state that, hey, it's not all sunshine because there's a lot of room for it to fall. Pointing the double rejection at key horizontal support regions and the fact that XRP is currently entering a region where there is little historical liquidity, both depicted in the chart below. The trader went as far as to say, this is probably one of the scariest charts I've ever seen. I wouldn't want to be bag holding this. And they're talking about, hey, it could go from 18 cents to fractions of a penny. So maybe. But Bitcoin could also go to 0. So I don't know. Who knows? But then you got Peter Brand saying, of course, he's a trader and he thinks Bitcoin's going to 0. So I haven't got a tweet from him. But he's also saying that XRP has a major downside. So here's this is the final thoughts on this one. I always see it as this. Bitcoin at some point will be a store of value. It won't be for transactions because it's too damn slow. It won't really be for anything else that I can see. Maybe I'm wrong. Let me know in the comments section how wrong I am, because I'm sure the Bitcoin maximalist will tell me what a moron I am. But I see it as store of value, and I don't see it doing anything else. Now, I think that it's got name recognition, and it's on the tips of everybody's tongue, and people know about it, and I think it's the first mover advantage, and I think it will do very well in the short term. Medium to long term, I have no idea. Look, that's what the whole prospect of building it up and doing something like a Lightning network, which I've heard is awful, or doing some other type of thing to make it faster. Because right now it's right now it's slow, but can you imagine if everybody turned on Bitcoin as far as transactions? It would crash. And then, of course, if you remember in 2017 how much it was for the transaction cost, it was huge. So store of value, that's it. And then, that's fine, because I think it's better than gold, and gold's been around for thousands of years, and gold's expensive. So I think Bitcoin could definitely do that part. Ethereum, I see as smart contracts in DeFi. Chainlink is the oracle for the smart contracts. XRP is for payments, and I'm going to tell you, a lot of people hate XRP, but it's super fast. No one can go against that. Transactions per second, I think, is like 15,000, 10 to 15,000. I think Visa is right around the same. I think Visa hasn't beat, though. But, they could do that. They can scale. They're built for that, and they're good for payments. Now, this is why I also have EOS, Cardano, and Tezos. It's because they're my hedge. I don't know what's going to happen with Ethereum. They're going to go to a proof of stake pretty soon in Ethereum 2.0. So they're not doing proof of work anymore, proof of stake. So I don't know what's going to happen with that. So I hedge my bet, and these guys got the other smart contract. So we'll see what happens. And that's it for today. So look, that's all I got. I want to say thanks for sticking with the rants. I really appreciate it. Let me know what you think in the comments section below. I'm sure I said some things that may have ruffled some feathers for some people, but that's just how I see them. And let me know what you think, and maybe it'll expand my thought process. Always looking forward to reading the comments section. And if you like this type of videos, I'm going to put 2 more up. One will be on the what's a smart contract, what's Chainlink. The other one is whatever YouTube throws up for you. I have no idea. That's it. Thanks for listening. See you on the next one.